Hello everyone, the Chart Guys have been working on an introductory technical analysis course for quite some time now, and after surveying hundreds of traders with what would be the most sought after information regarding technical analysis, we came up with this course, When to Enter and Exit. It covers over 5 hours of the basics on when to enter and exit, and we feel after watching this course it will help build a foundation of technical analysis knowledge which will eliminate a lot of the uncertainty in the world of trading stocks. So the course outline, we go over the psychology of trading, establishing a game plan, the different indicators we use to signal a bullish and bearish entry, how to recognize support and resistance levels, poor entries, where traders make mistakes, exit targets, how do you know where to sell your trade, where to place stop losses, that's very important, minimizing losses is what keeps you in the game long term, my personal preparations, how I go about getting ready for each trading day, and then piecing it all together, utilizing all the information we just learned and how to apply that in the real world for making successful, profitable trades. As a bonus, we also include a lot of information on finding entries and exits utilizing patterns, and you can find these patterns on every time frame on pretty much any stock and commodity trading, and certainly being able to recognize those patterns can give you an edge as well. So we hope you will check this out. Again, it's an introductory level course. So if you are new to technical analysis and trying to get a firm grasp on things and feeling a little bit overwhelmed, then this course is for you. I hope you check it out. Appreciate you watching. Hello everyone, checking in on SPY. So we had a bull break of the inside candlesticks. Unfortunately, it was a little bit of a gap up open and then a very small tight trading range. So there wasn't really much opportunity to capitalize on this bullish break with regard to trading SPY. But obviously we can see the tightening pattern, smaller and smaller and smaller ranges before a break to the upside with higher lows and higher highs. We can anticipate low volume for the rest of the year as we have our last full trading week, 3 days left. And then next week we've got the shortened week, and then the week after that we've got a shortened week with the new year. So volume is going to be a little bit more difficult to gauge. We've got the all-time high for SPY at 227, and again, stock charts adjust for the dividend that SPY distributed. So otherwise it would be a bit of an artificial change in the price affecting the chart, and they factor in for that. So I know SPY hit up in the 228s, but as far as I'm concerned, if we break 227, we get higher highs on SPY, and the bulls continue to show strength. Weekly time frame, we are not confirming the bearish reversal doji. Still 3 trading days left to go, so it can go any way. But as of right now, we had that bull break. We've got the upper Bollinger Band holding its support of 225.77. And we are not seeing the red week needed to confirm that doji. So looking at the shorter term time frames today, we can see the bullish action occurred pre-market. And I cut it off here a little bit, but if we zoom out, there's the bullish action leading to the gap up. And looking at regular trading, again, not a ton of volatility. The majority of the range for the first few hours was set in the first 15, 20 minutes. And our low and the high of the day, higher low, lower high. We had a bear break here where we broke the higher low pattern. And then from there, it was lower highs and lower lows. Although the bulls did see a lot of strength at the end of the day and saw a pretty strong close relative to the trading we saw. So there is still a resistance here up at 226.40. And we closed with a high at 226.39. So a clear resistance that would have to break for this lower high pattern on the 5-minute to reverse and change for the bulls. And we can see that the low of the day did come in the afternoon before that rally occurred. What I am watching heading into tomorrow, all about the hourly time frame. Look back yesterday, the 20-period moving average, we bounced off of it 3 times, so it's a key support. Look where the low of today bounced off of, right off that support level, bullish reversal hammer confirmed, and it really didn't even need to be a reversal hammer because the bulls were already in control. But a bullish hammer confirmed. Look at this 100-hour resistance, rejecting pre-market. 1, 2, 3, 4, 5, 6, 7. We did close just above it here, one candlestick, but then quickly fell back under it, and we only closed over it. Actually, we closed directly on it. So it looks like we closed over it there, but it was still directly on it. We have not closed over this moving average resistance yet. And heading into tomorrow, you can see this tightening range. 2 days of holding this 20-period support, very clear resistance rejections, and by tomorrow, we're going to see a clear break over one or the other because we're not going to be able to continue to trade within this tight range. A break is imminent. So we'll be checking into the hourly time frame pre-market to see where we stand relative to these moving averages, and we will see if the bulls can continue the strength we saw today. And again, it wasn't a ton of strength, but it was a clear bull break of that tightening daily pattern. So I appreciate you watching. We'll check back in tomorrow. Bulls are still in full control.